Hey guys, welcome back to another Sunday video. Each week we take a look at setups and ideas for the week ahead for possible trades that I'm interested in. And I wanted to start out just by giving a little bit of a highlight to Frank. He is one of our analysts inside of the group, and I just wanted to show off this. USDJPY, my man Frank, is floating 500 pips on a single trade. That is phenomenal. What we're looking at here is the A1 trade tracker, by the way. It just kind of keeps track of our recent trading performance within the group that we offer, the service that we offer, which is linked in the description. And I want to show you this because look at how much we've been trading the USD pairs. In fact, almost all of these recent trades that we've been doing, USDJPY, dollar yen, dollar Swiss, euro dollar, euro dollar, euro dollar, dollar Swiss, dollar yen, dollar Swiss, you can see we have been trading the dollar crosses almost exclusively for the last few weeks, and it's been phenomenal. We've been pretty much exclusively biased to the upside on the dollar, which remains our bias until something changes, and we'll discuss that more in the future. Now, again, this is the trade tracker. If you guys are not already using the trade tracker, you can get access to it inside of the VIP. If you are a VIP member, if you're a gold member, you get access to this for free. You can find out more information by sending us a message if you don't have access to it. But anyways, what we're looking at here is we're talking about setups for the week ahead. And I wanted to start with the continuation thought process in the dollar, just to show you guys we have been very active on the US dollar. But currently I don't have any positions that I'm in right now. So with that said, though, I still have a bullish bias on the dollar, and I wanted to discuss that a little bit going into this week. We saw a big explosive move towards the end of last week, and the question is, if you want to be long the dollar, where's the opportunity? Well, for me, we sort of might have missed the boat. At least I wanted to buy more USD crosses down in this area, but we did not quite get there. We actually double bottomed just prior to that and sort of missed that move. So if this level comes back into play, perhaps this week, the dollar may be an opportunity to try and pick that up. Now, towards the end of last week, we saw a really crushing turnaround for the indices, the SP500, giving back a lot of its short-term gains that we launched off of. And with that, the dollar sort of coming back up, right? These two tend to be a bit inversely correlated. So I was looking at the S&P and I was like, okay, well, this thing looks super bearish, and that could actually be a catalyst for more upside on the dollar. Now, speaking of dollar crosses, let's take a look at dollar yen. So we're looking at dollar yen, and this thing has just been monstrous. Like I mentioned, Frank's trade right now is just absolutely going crazy. His entry was 141.25. He shared that inside of the Discord like a while ago. 141. I mean, this guy, he caught the sell-off and has been holding this trade since. So a incredible trade by Frank. And now the question is, well, how can this thing run? Well, if I take a look at the major currency pairs and I go to dollar yen still has a buy reading. It's still printing, continuation, bullish trend, following the money, if you will. And I wanted to show you guys the most recent data that we have from the COT data. Of course, the Commitment of Traders report shown right here under sentiment. What we can see when comparing these two currencies, we have dollar yen. Dollar upped even more. We upped our exposure, or at least hedge funds and smart money has basically upped their exposure to the dollar even more in the most recent reporting, putting us at a 78.5% bullishness for the US dollar. Incredible, you guys. This has gone on for, a year plus with this entire risk off rotation. Anyways, comparing, we see that the yen has made a slight comeback a little bit, at least in long open exposure, but still a overwhelming 78% short. So in terms of smart money, the move has been and still seems to be buy the dollar, sell the yen. Well, the crowd also very short on dollar yen, trying to catch the reversal. Of course, this is a common theme among retail traders. We see this very often. So dollar yen to me is a buy. In fact, let me go ahead and close this window. Is a buy on a pullback. So until further notice, I mean, this thing is trending beautifully. I would love to pick it up long, but I have to wait for it. So let's put in some fibs and see if we can find a level. So I do like this 61.8. If you get a touch back into that area, that to me looks like a pretty attractive opportunity to try and get long the dollar yen on a pullback. But as we speak, a little bit out of the way, that's kind of, we would need a pretty big US dollar reversal for that to happen. We'll take a look at USDCHF, which has been a very popular pair for me in the recent weeks. I've got a lot of upside on this move, and this thing continues to trend very nicely. So we have bullishness overall. But again, looking for a pullback here. Where can we find some pullbacks? Well, Let's see if we can find some structure narrowing in a little bit. We're on the hourly chart. You do have some pullback opportunities, at least in my opinion, once you start getting into this range. Now, this is a pretty choppy, ugly mess, which is sort of to be expected with all the news that we had last week. The market was just, up and down and up and down. It was a crazy, crazy week. But if you get some sort of pullback into that zone, I think that there is opportunity for sort of a continuation move here into the future for the dollar Swiss. Now, of course, that's my opinion, and that could change, but I will be looking for pullback plays on this cross this week. That is definitely one that is on my watch list heavily. You get some nice positive swaps going long, dollar Swiss and dollar yen, so both of those are interesting to me on the long side if we do start to get a retracement. So let's see, if we draw our fibs here, maybe a little clarity at the 50% retracement. That looks really nice. And then maybe if you're very bullish, possibly making an attempt at the 38.2. Let's take a look at the edge finder on dollar Swiss, see if there's anything here as well. And yep, still a +4 overall. Momentum scans to the upside. Seasonality is strong for the month of October and November. And if we take a look at the commitment of traders data, again, there's our USD continuing to print higher, yet CHF continuing to actually be more sold by institutional traders. So this one makes it even more attractive to me looking on the long side for dollar Swiss. And again, you can pause the video at any time if you'd like to look at this. I'd like to, of course, take a look at the big one, euro dollar. Strong sell here, still printing for more downside overall. Mixed retail sentiment, 55.45. That's pretty mixed, but let's go take a look at euro dollar from a technical standpoint. See what's going on the 4-hour chart. We have sort of a consolidation zone. So if you're looking at it from a price action standpoint, I'd be interested if we can get a break to the downside. And then maybe for the short term, for the day traders, possibly if they get a break to the upside, there could be something there. But for me, I like it underneath the 96.80. If we can get a break underneath there, there might be a nice clean break and retest opportunity in which I could see myself looking to get short. So there you go. I like euro dollar on the short side. Targets, or at least where we think we could get to that one, I think you have a pretty clean move coming if you get a break underneath this level. If you start getting, opportunities, see signs of weakness, breaks, retests, I think you have a pretty clean move back down to the lows. But then ultimately, goal would be for me to trail stops and see if we can actually get lower down into the 92, deeper into the 92s, even 93s, right? I think it's not out of the question considering all of the pressure on the US dollar bullishness, right, due to Federal Reserve being so hawkish. I mean, with that number, by the way, you guys, the news from last week, CPI came out higher than expected yet again. We missed the numbers that we were looking for, and that puts more pressure on the Fed to stop inflation. What do they do to stop inflation? They raise interest rates. What does interest rate hikes mean? Usually it means bullish for the underlying currency, aka USD, right? So we just broke that down, but the idea is more rate hikes faster could put more bullish pressure on the US dollar against other currencies. So we could take a look, for example, also like dollar CAD. Has to me still room to run. As crazy as it sounds, right? People will look at this and say, this thing is already up. It's got to be topping. It's got to come back down. But that's not necessarily the case. When you get strong, fundamentally backed trends, they can go for much longer than people are expecting. So be on the lookout for pullbacks here, I would say. Possibly a deeper retracement if you get this sort of poke back into the previous lows. To me, that would be a pretty simple attempt to look to go long. And continuations. Again, fundamentally, technically, I really like dollar CAD, dollar Swiss, dollar yen to the upside going into this week. If we get any pullbacks, I'll be looking out for it. Let's move to gold here. We'll take a look at XAUUSD. Continued bearishness, and in fact, breaking underneath the lows really strong last week. If you get any sort of retest, we already saw the retest, how quickly it was sold. If you do get another attempt there, to me, this is still just a sell on the rallies until further notice. Again, very, very simple. You got your moving averages to the downside overall. I'm sorry, I just switched pairs. Got your moving averages to the downside overall, right, on the daily chart, on the 4-hour. I mean, this thing is just very, very technically bearish until further notice. Now, again, what do we need for that to change? We need something to give on the Federal Reserve's hawkishness, right? We need to see a pause on, a willingness to raise interest rates so quickly and so aggressively. So, of course, gold. And also, Edgefinder has been calling for bearishness on gold for weeks now. So let's see if it's still printing that. It is indeed. In fact, a -7. That's a lot of bearish bias there when it comes to the gold market, still continuing to be overall very, very short bias. And look at this retail crowd continuing to try and pile into longs. They've been long for weeks now, 71% long, 29% short. That is a heavy bias towards the retail crowd trying to buy this thing. That tells us, okay, well, if the retail crowd is pig piled into longs, we got to be very careful that we ourselves are not just, chasing the same trades as the traders that are tending to lose money. So just something to be cautious about. We also see, of course, institutional data, COT data. We have sort of a mixed result here. We have gold still actually a slight increase in positioning on the gold market for COT for the non-commercials, right? And then if you take a look at the US dollar, we have a slight increase as well. So not a whole lot of bias there when we analyze the COT section, but across the board, we have lots of other factors. Strong downward trend. We have a seasonality report giving us, the month of October and November expected to be slightly bearish for gold. Retail sentiment, we could take, like we already discussed, retail crowd is very pig piled into a long position. We might want to actually be on the short side of that. So that's my opinion. We'll continue. It's still, this is crazy. Long-term forecasts still maintain around the 1600 mark, 1595, as crazy as that sounds. We've already hit targets on this one, 1645. We've already tagged that one. Thinking about a move down to 1620 and 1600. So there's your forecast on there. We'll move just quickly to oil, which actually has a buy reading. A little bit interesting going into the week. Mixed sentiment here, but if we take a look at the non-commercials, we have a pretty strong oil exposure here, 80% of institutional positions on the long side of oil. So very interesting. Take a look at US oil. You can see it's actually been giving a retracement. So there might be some opportunities if you're bullish on there, if you're trying to align yourself at least with the latest reportings, could be something to pay attention to there. So oil, an interesting one, but not usually one that we focus too heavily on in the content here. Let's keep going. We'll take a look at something like CADJPY, one that I'm actually interested in myself. I'd be interested to possibly pick up CAD yen on a pullback, though I don't think this has a lot of confirmation for the edge finder, so that might keep me out of the trade. Let's see. Yeah, we're hovering though. We're very close. We have a strong uptrend, so we have seen some nice breakouts to the upside. Things look pretty good price action wise, but where we're not gaining a lot of traction is the Canadian dollar is not super favorited by non-commercials, and neither is the Japanese yen. So you sort of get just this knockout on the COT side of things. Now the crowd is very short biased on this pair, which gives us a plus reading, meaning, okay, more biased to the long side. But then in terms of fundamentals, you sort of just have economic numbers that are teetering back and forth. You got GDP, inflation, and unemployment favoring the yen, whereas you have interest rates favoring Canada. So I would like to be long on this, but it just doesn't look like it's going to happen for me in terms of the edge finder, as I use this to sort of guide which trades I take and which ones I leave. Now let's go to the score chart summary. This helps a lot just by taking everything into account and showing the top trades. So we already discussed a couple of these: dollar CAD, dollar yen. Dollar Swiss is up there as well. What about Euro Swiss? Euro Swiss, let's go look at that. Why not? Euro Swiss, so we'll go find EURCHF on here. What's giving this thing a +4? Okay, so it's going to be your COT data pointing towards more of a bias towards the euro over the Swiss franc. We take a look at seasonality. We can see seasonality during the month of October is slightly positive, though we have to be cautious because November looks slightly negative. Take a look at the trend reading, a nice upward trend. We'll take a look at Euro Swiss in just a moment. GDP growth and interest rates favoring Europe, whereas inflation and unemployment favoring Switzerland. So if we take a look at the chart for EURCHF, see what's going on with EURCHF overall. So a nice start, I suppose. What it's kind of calling for is a little bit of a trend change here. So we had this sort of clean downtrend, and then now starting to see a little bit of momentum switch to the upside. So not my favorite on the list, but it's something different. We tend to talk a lot recently about all the dollar crosses, so it's nice to see something else on there. We'll go take a look at score chart summary once more. Anything else? Dollar ZAR. We have Swiss yen. Swiss yen might be interesting. EUROJPY. And let's take a look at some sells, see what's going on here. We have gold, AUD, NZD. I think that might be an interesting one to look at. Pound USD. Again, another dollar cross. Aussie dollar. Pretty uniformly, we've just been selling other counter currencies against the dollar for several weeks, as I showed you guys with that the trade tracker at the beginning of the video. By the way, you guys, if you want to see all the trades being taken inside the group, I should have mentioned this earlier, but if you're not already inside of our Discord, please feel free to join us. The link will be down below in the description. You can see all the trades that have been taken. So again, dollar Swiss has been a pretty good one to me recently. I've also also been short euro dollar a lot, and a little dollar yen in there as well. So if you're not already inside of the group and you would like to see all of the trades, here's something I'll tell you. So we are not big fans of just signal services. It's not just like a sign up, copy, and make a bunch of money. Like, we don't think that that's really how trading works. We are analysts, meaning we take into account that everything that we do is based on probabilities. There's not certainties within every single trade or anything like that. We share what we are genuinely putting our own hard-earned money on, and we share full breakdowns and analysis as well as pictures with every trade that we take. So if that would be helpful to you and you're not already in a service like this, again, I don't see very many other services that do it like this, where they offer a full breakdown with everything being done and explanations and, you know, read up on our strategies and that sort of thing. If that would be helpful to you, click the link down below in the description, apply the promo code that is down there, and you'll get access for a cheaper price. And I'd be excited to meet some of you guys inside of the group. We have chat rooms, there's trade ideas where everyone can share their thoughts and opinions. We have webinars and so much more. So click the link in the description and sign up to join us if you are serious about your trading and you want to meet other people who are also doing the same thing. Again, it's the place to be. Things are going on there. S&P 500 still actually in a sell rating, which is interesting. What's getting it into? So COT is pointing towards sell. Retail sentiment is getting into sell. Actually, let's go look at that. Can we see that? Let's go to indices, SPX500, retail sentiment. So the crowd is actually long on the S&P. Very interesting. And then if we take a look at the trend reading to the downside, that's pretty clear. So we get a -3 in S&P 500. Very interesting to see that. SPX 500. But I mean, it makes sense in terms of like a trend following perspective. This thing has just been super negative, super bearish, right? So this is the 4-hour chart. So every single rally has been, again, just sold into pretty aggressively. So, you know, as sad as it is, I would like to see this thing continue to rise for my own portfolio, but as sad as it is, it does look like it's probably headed back down to lows and possibly even breaking through if the trend does want to continue there to the downside. So that's the thought process there. I wanted to show you guys too also the smart money tracker, just to look at this to see what's going on. So this is going to show you just in terms of every asset. If you'd like to pause the video, you're welcome to do that. And just take a look at each different asset. So if you're looking at, like, for example, silver or euros or gold or dollar, you can see what the net exposure is on the non-commercial side of the CFTC's commitment of traders data. I know that was a lot. If you're new to trading, that could sound confusing. The CFTC's commitment of traders data comes out once a week in a format that just shows what institutional positions are looking like. It is a delayed indicator. It's not something that tells us, you know, this is what they sold this morning. It's, you know, what they sold last week. It's lagging, but it still can be useful in my opinion and in my experience, because what you can look at is, for example, you know, a lot of these positions are month long trades, right? They'll be in a dollar trade that they're adding to week over week, right? They're like buying. So seeing this number can be very helpful, knowing that they're very exposed to a dollar trade. So they want that dollar to continue to rise, right? That's or at least that's their forecast, their opinions, their positioning. So that could be really useful. You take a look at all the different assets, you know, comparatively speaking, like the pound is very short, heavy on the non-commercial positions. So that could be really useful information. And also, if you have the Edge Finder, you can read this here, or pause the video if you want to read this here. If you don't already have the Edge Finder, this is also something available. The link will be down below in the description. If you want access to the tool, click that link, use the promo code that's in the description, and you'll get access for a cheaper price. But we've got our smart money tracker. You can see what the retail crowd is doing at any time. This is also very useful. You have price forecasts, heat map overall, smart money tracker, score chart summary, and so much more. So if you're not already using the Edge Finder and you'd like to, again, we've invested quite a lot of time and money building this tool. I own a company. We have a couple different people who are designing the software here, and then a couple people who are on the trading side actually using, researching, and helping to create this thing into a better tool every day. So check it out down below in the description. Thank you guys very much for tuning in. There's a couple ideas for the week ahead. Happy trading, and we'll see you back tomorrow.